Financial intermediaries. Intermediary basically means a link or channel between two people. Financial intermediary is usually an institution which helps to complete the transaction or exchange of money or other possessions that have a value or can be bought by money. The two people who are at opposite ends of the intermediary owns the assets. Intermediary just strikes the deal to exchange the value. One of the two people who is a saver who has already saved up money or other assets and is open to lend it or invest it to make more money. On the other hand of the intermediary stands the borrower or spender who's willing to spend or in need of fund to establish or run a business or perhaps build a house. Simply, the borrower is in need of money. The financial intermediary strikes a deal between the two by making the parties happy. There are several types of financial intermediaries. Let's take a look at them. Number 1. Banks. It is one of the most common financial institutions or intermediary we see. A bank usually has two jobs. So let's say that Mashiat needs $100 to build a house, but she has only 70 on her. So she comes to a bank, she provides her income statement and asks for a loan of $30 and tells the bank that if she can't pay the loan back, the bank becomes the owner of the house. But where does that bank get the $30? The bank collects the money from several people like Mashiat, and everyone saves their money they earn in the bank. From that money, the bank takes the $30 and gives it to Mashiat to build the house. Now, Mashiat has to pay back $30 and extra $10 interest to the bank. The bank shares the $10 with the people it took the money from and makes everyone happy. The other job that the bank does is to pay the checks issued by the people that they save in their money in the bank. Number 2. Mutual savings. The other type of bank is the mutual savings bank. Here, imagine three people, Mashiat, Sharzil, and Ishmam. They all say that they have some money, but they're too busy to invest it on their own. So they open up an account in a mutual savings bank. That will be known as their mutual savings account. The bank takes their money, makes a common fund. From that fund, different investments are made on loan, mortgages, stocks, etc. The profit or the loss is shared by Mashiat, Sharzil, and Ishmam. It's basically a business. Number 3. Financial advisors. People who consult the people who are interested to invest their extra money. Let's say Tahamid has $500. He wishes to invest it on something but doesn't have proper knowledge. So he knocks up Mahima, who is a stockbroker. She keeps knowledge about the market and knows the price of the stocks, and also can calculate where and how much to invest. So, Tahamid gives his $500 to Mahima. Mahima invests it on stocks or any other assets on the condition of commission of the profit received. Number 4. Insurance companies. Sells insurances to the people. An insurance is basically a certain amount of money paid to the people who subscribed to the insurance when in need. Let's say a life insurance is paid to the benefactor of the subscriber of the life insurance after death of the subscriber. The subscriber pays small amount of money, which is called premiums, in certain time intervals to subscribe to the insurance. Number 5. Stock exchange, where the broker or the financial advisors work. This is the place where all the companies list their stocks and assets. And stockbrokers gain knowledge about the stocks for which they can recommend their customers to sell or buy stocks, shares, or bonds.